75%. That's the return on shares of Coinbase just to the average analyst target price, and I actually think it could go way higher. The potential to double your money, but I am not buying the shares. In this video, I'll give you a complete Coinbase stock analysis and a price forecast. Then I'll reveal why I'm not investing and what to do instead. We're talking Coinbase stock today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and I want to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. All you out there in the nation know I love what's called these picks and shovels plays. Those companies making the money on the tools and the services to a major trend. Of course, the best example of this was during the gold rush of the 19th century. Hundreds of thousands of people flooded into California to strike their fortune. In the end, it wasn't the miners that got rich, but the people selling the products and the services to them, like Levi Strauss, who turned blue jeans into a company worth $11 billion today, or California's first millionaire, Sam Brennan, who literally got rich selling picks and shovels. And this idea, it's not just for digging nuggets out of the ground, but also works with stocks. Investors in shares of BlackRock, ticker BLK, the world's largest asset manager selling the iShares group of funds, have been rewarded to the tune of 493% return over the last decade. Even better, shares of the CME Group, ticker CME, owner of the Chicago Mercantile Exchange and the world leader in futures trading, have produced a 571% return over the last 10 years. These companies are the picks and shovels equivalent to investing, collecting fees on those ETFs investors buy and operating the major exchanges where investments are traded. So it's no surprise that investors have gone all in on shares of Coinbase, the first cryptocurrency exchange to list in the US markets. Coinbase was valued at $87 billion in its direct listing on April 14th. And YouTubers, please stop calling it an IPO. Not trying to be anal here, but it is totally different from an IPO. The shares jumped to as high as $429 each on the first day of that direct listing, and then... What is the deal with Coinbase stock? Shares are down 48% from the peak in just the first 2 months of trading. Sales more than doubled last year to $1 billion and are expected to keep running at those double-digit growths. This stock should be on fire. In this video, I'll give you a complete Coinbase stock analysis, show you the numbers, and why I think this share price could zoom 75% higher from here. That is 75% upside potential, but stick around because towards the end of the video, I'm also going to reveal the simple truth behind investing in Coinbase versus cryptocurrencies and why I'm not buying the stock. Now we're going to get started, but I want to get your input on this as well. After listening to what I'm going to say on Coinbase stock versus investing directly in cryptocurrencies, do you still think that the company is a better investment? So scroll down and let me know in the comments below. Coinbase stock versus Bitcoin, which are you investing in and why? Coinbase has grown to the largest cryptocurrency exchange by market cap, though it still does trail on trading volume. The platform grew its shares to 11% of the crypto market, almost threefold market share growth in just 2 years. That is a solid market share gain and should be fairly durable as the platform adds more available coins as well as products and services. Verified users are growing at a 37% annualized pace over the last 2 years to 43 million. And what's really amazing here is we are still just in the beginning stages of this movement. The Gemini Exchange estimates that just 21 million Americans own crypto. That's about 14% of the adult population. Now compare that to the 83 million Americans holding stocks, about 55% of the population, and you see the potential for growth here. Just in the US, ignoring all that international growth, there are potentially 62 million more Americans that may adopt cryptocurrencies as it becomes a legit asset class. And then on that growing customer base, Coinbase books revenue on transaction fees as well as subscriptions and services. Users pay a percentage fee for buying and selling crypto, about 1.4% on average, and then the platform has also started offering services like custodial accounts and staking. Transaction fee revenue grew by 9-fold on a year-over-year basis in the last quarter to $1.54 billion, and services revenue grew by 8-fold to $56 million. We'll look at what these numbers mean to the price of Coinbase shares next, but this is a graphic that should get every crypto investor extremely excited. This shows the growth of trading volume on Coinbase over the 3 years through Q4 of 2020. And you see that trading volume does follow the price of Bitcoin, so there is some volatility there, but the overall trend is the point. Volume from regular investors, that retail users in blue, has grown to $32 billion. More importantly, though, the institutional investing, the money managers, and the larger funds have grown to over $57 billion a quarter from next to nothing in 2018. Now, this is important because it legitimizes cryptocurrency as an investment. Besides just the credibility from those fund managers putting their clients' money in crypto, institutional also represents a pool of $89 trillion globally, many more times than the retail investor segment. So you've got that backdrop for Coinbase, the fundamental picture. Now let's look at the revenue and the income and how we can use it for an analysis and the price target on the shares. Revenue jumped 139% in the most recent quarter to $1.8 billion. And what's more important here is that the operating expenses, the costs to run the business, only increased by 50% to $580 million. Now that is a great sign when a company can grow its sales faster than expenses because it means it's getting more profitable. Now, the disclaimer here is that Coinbase has spent just 5% of its revenue on advertising and marketing in the past, and it has said that it's going to increase that as high as 15%. So profitability will probably come down a little bit over the next couple of quarters, but hopefully it also increases those sales. Analysts are expecting Coinbase to report total revenue of $6.3 billion this year and $7.35 a share in earnings. And that would put the shares at a price of about 30 times earnings and 9 times its sales, which actually isn't that high for a growth stock. For example, shares of streaming platform Roku trade for an eye-popping 400 times price to earnings and 22 times its sales. Now, to get a fair valuation of the shares, of course, we really need to compare Coinbase with another investing exchange, and I'll show you how to do that next. The weird part here, though, is that analysts seem to be predicting a Bitcoin winter next year. This is a long period, like we saw after the 2017 peak, a year or more where the price of Bitcoin drops and trading volumes fall significantly. And now I say this because analysts are only forecasting revenue of $5.6 billion for Coinbase next year, a drop of 11% from this year, before rebounding 28% to $7.2 billion in 2023. But I'm not sure this makes much sense. Analysts don't really know that a crypto winter is coming. They're just looking at what happened after the price of Bitcoin peaked in 2017 and saying that it could happen again. So what we have is this leaves a potential surprise upside to the shares if crypto keeps growing as an investment and the company is able to grow sales next year as well. Coinbase is aggressively growing out that segment of subscription and its services revenue, and that's key for that longer term value here. And we've seen that race to the bottom in fees for stock investing apps, and there's no doubt in my mind that it's coming for crypto eventually. Coinbase is safe for now, collecting billions of dollars in fees, but it needs to diversify into that service revenue for the longer term growth. Among the 13 analysts covering Coinbase shares here, the low target is for $250 a share, more than 10% above the current price. Targets range as high as $650 a share, and the average target is just under $400 a share for a 75% upside. Now, for my own price forecast on Coinbase, I want to compare it to a similar company, the CME Group, ticker CME. The company operates the Chicago Mercantile Exchange and is a $78 billion leader in global derivatives and futures trading. CME booked $4.6 billion in revenue and $6.19 per share in earnings over the last year. So besides being very similar companies, same business type, the numbers are oddly similar here as well. Similar market cap, revenue within $1 billion, and a per share earnings that are almost identical. On a share price of $217 each, CME Group trades for 35 times earnings and 17 times on a price to sales basis. That's the $217 stock price divided by $6.19 in per share earnings, and the $77 billion market cap divided by the $4.6 billion in sales over the last year. So if we use those same price multiples to value Coinbase, we get $257 on a price to earnings ratio and as high as $408 per share on that same price to sales ratio. In fact, the price to sales ratio gets Coinbase up to $100 billion market cap on this year's expected sales. But Coinbase also has some insane growth, doubling revenue over the last year and the potential to bring tens of millions of users into that cryptocurrency space. And compare that with sub 10% annual revenue growth for CME Group, and you can easily make the argument that Coinbase deserves a premium valuation on those price multiples. Now, just on this, I can see shares of Coinbase trading between that average analyst target of $397 to even as high as $450 a share over the next year. That's potentially 100% return on the stock, but I am not buying. And here's why. Think about it this way. Success for Coinbase depends on success for cryptocurrencies. If crypto dumps tomorrow and nobody wants it, then there's no reason to invest on Coinbase. Coinbase has over $2 billion in cash on its balance sheet, no debt, and it's a cash flow machine. So it and all the other exchanges are spending to attract more investors and keep up that momentum. But its success is unavoidably tied to crypto. In fact, Coinbase needs crypto investing to be really successful. While 30 times on a price to earnings basis isn't insanely high, the stock does need those earnings to keep growing at that double digits just to justify this price. Revenue needs to grow at that double digits, which means money needs to keep flowing into cryptocurrencies. Because if millions of new investors, corporate cash, and institutional investors don't keep pouring all their money into crypto investments, Coinbase doesn't meet those revenue expectations and the shares will drop. So here, Coinbase investors need crypto to keep booming, but if you turn this argument around, crypto investors don't necessarily need Coinbase to be successful. If cryptocurrencies like Bitcoin and Ethereum continue to see booming investor growth, token prices will continue to reach new highs. And yes, Coinbase will probably do well, but it's no guarantee. According to CoinMarketCap, there are more than 19,000 crypto exchanges, and each is competing for more share in that market. Binance is easily the largest by trading volume and number of coins available, and I have no doubt in my mind that we will eventually see a race to the bottom in fees, just like we saw with those stock investing apps. So if you think about this, it's really a win-win situation for investing directly in Bitcoin, Ethereum, or some of these other cryptos, but a less certain outcome for Coinbase. Do I think Coinbase will do well as that picks and shovels play? You bet your ass, and I think it's worth way more than the current share price. But if you're looking for the higher return and the more certainty in investment, you gotta go with investing directly in cryptos. Because not only does the direct investment in cryptocurrencies have that better certainty of success versus Coinbase, the higher return is gonna be there as well. I recently did a video on the price forecast for Bitcoin, along with 7 other cryptocurrencies like Ethereum and Litecoin. With a minimum price target of $94,000 for Bitcoin and $8,000 for Ethereum, that's between 135% to a 200% return that I think you can make with this direct investment in cryptocurrencies. For Coinbase shares to do that, they would have to reach a market cap of $180 billion. Now, that's larger than Goldman Sachs, larger than McDonald's, and it would be more than twice the size of the CME group. Now, don't get me wrong here. I do like Coinbase as a platform. It's the most secure exchange available and has a great customer service. So I actually invest in Bitcoin and Ethereum on Coinbase. I then transfer some of my coins to a wallet on BlockFi to earn interest up to 8.6% on my crypto investments. It's the best way to invest and earn while you wait for those prices to head higher. Click on the video to the right for a full price analysis on 7 cryptocurrencies, including Ethereum and Litecoins, which to buy for the best returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.